Hello, everybody. Welcome back.
All right, all right. Welcome back to another episode of Investment Realtors Podcast, Go To Realtors Podcast.
Yes. Don't
Justin
forget
here,
Lewis.
co-host
Lewis right here.
Lewis Seltz. Okay, so we got a kind of a different video for you guys today. We've gotten a couple of questions in from longtime viewers.
Tons of emails, guys. Thank you so much for all the emails and all the support. We really appreciate it.
Absolutely. So we figured, give the people what the people want, which is answer some of their questions.
All right.
So
that's what we're here for.
So Lewis,
Tell me,
let's dive into the world of mortgages. I mean,
mortgages.
Everybody's got a mortgage. What would you consider picking a wrong mortgage type would be? Like, are there any kind of one fits all kind of mortgage, or they're all kind of like different or tailored? What would you advise? I know we're not mortgage
experts,
brokers by any means.
No.
But of course, we get our clients' opinions just based on what we've seen with dealing with different lenders, different brokers. So could you give us a little bit of what you see when it comes to picking like a mortgage type?
Well, funny enough, everybody's always a Monday morning quarterback when it comes to mortgages.
Yes.
Before the pandemic, everybody always said variable.
Of course.
Because to break a variable mortgage is way cheaper than to break a fixed mortgage. And I get it.
But why would you break a mortgage?
Whether you want to sell, whether you want to refinance, whether or not you want to break down mortgage, whatever the reason is, it's much cheaper on a variable.
Okay.
And you're kind of going with the market trends. So I remember before the pandemic, the fixed rate was actually higher than the variable. And it was like that for years, right? Then the pandemic came and everybody's mortgage rate who was variable was laughing. You had 2 good years of low mortgages. And everybody said, because the government promised, they said, hey, it's going to be low forever. Now, obviously, if you listen to the government, you got a couple more issues. So everybody who went on variable essentially got screwed over the last couple of years because they went up incredibly, right? And people we know that locked in at 2.5, 2.6 fixed, even though the rates were at 1.2.
They're laughing.
They're laughing now, right?
They are.
So there's a couple of things to consider when you're picking a mortgage.
Okay.
I wouldn't look too much at the market and what like the media or the banks are saying because nobody knows. What you have to decide is what's best for you.
Okay.
How long you want to stay in this house? How much can you afford? Do you foresee anything in the future where you want to either take out another loan or anything to do an upgrade on your house?
Okay.
Take into consideration a couple of these things. Mortgage rate itself, I mean, we just looked at the variable versus fixed, right? And what? The difference is like, it's not even that much. I mean, the fixed right now is even higher than the variable is higher than the fixed right now.
Yeah.
Which means one of two things. Either the bank knows something we don't know and they're planning on lowering it soon because why would it be so much higher?
Okay.
It's variable.
That's a good way to look at it.
Or everybody doesn't know what's going on and they expect it to keep going up. Either way, you're kind of shooting in the dark. Right now, what would we recommend? Off the record, of course, because we're not mortgage brokers.
You need to get opinions from
a mortgage broker.
This is just all our opinion.
This is all our opinion. I don't know. It depends on your situation.
Yeah.
I wouldn't even shy away from a variable right now, even if you're starting now, because it's got nowhere to go but down, essentially.
I mean, it's scary with September around the corner with another bank announcement.
In October, I think.
So, I mean, it's all speculation what we hear on, okay, maybe they'll raise it one more time September, and then they say in 24, oh, okay, it's going to stay consistent and then lower. One thing that we've seen in doing some research is traditionally in the past, as fast as mortgage rates have gone up,
they could go down.
They've come down. Now, I guess to what Lewis was saying about the different mortgages, we do know some people that have smaller mortgages that are on variable that they are like, well, I wrote it out. I had the 2 years. I'm just going to write it out. We know other people that have doubled their mortgage. And I mean, with those people that it could kind of seem dark and gloom, all we could really tell them is usually the penalty for them to break it, depending how far they are in the variable term, isn't worth to break it, is figure out a way to just keep going because it's not going to stay like this forever.
No.
Like you're kind of stuck between a rock and a hard place where You've already gotten, let's say, those 2 years of the low rate.
The low
The
rate.
last year, you've been really taking it on the chin. You might take it on the chin one more year, but I mean, your only other option would be then what? You're
To
going
sell.
to sell. And then, so you have to, one thing we know for sure is you have to always live somewhere. So you're going to sell and potentially rent with how crazy the rent market is now.
Yeah.
You might be paying in rent what you were on your
On
mortgage.
your mortgage, yeah.
And you're not even owning it. That money, there's
It's
no
gone.
equity building up. So it's tough times don't last, tough people do. And I know it sounds cliche and oh my God, that's so, but just do what you can to make it, just stick it through the storm is what our advice would be. If you can't break that variable, I personally don't think it's going to stay high, just like how Lewis was saying. It makes me wonder why fixed or why variable so much higher than fixed.
Yeah. What was the fixed? It was 5 years. They do now.
So for the variable, multiple lenders we were talking to was only a 5-year term. So I mean, your only hope with that is you got in like 2020, so you've gotten about 2 years of the low, so you're only still riding out the next 3, and hopefully this year is kind of, the anomaly, and 24, 25 will at least lower to kind of offset these high costs. We don't know. It could be it goes up more, and then at that point, that's a different conversation to have with a mortgage broker or bank.
Well, let's say today, you're buying a house today, and you're putting a fixed mortgage rate right now of like 6.5.
Yeah.
Right? So that's, and like I only see like 4 or 5 year terms for fixed as well.
You can do 3.
You've seen this a 3?
So from what we're no mortgage brokers. Depending what lender you go to, you could do even a 1-year term with with a private lender or a different, not a bank. Obviously, you're going to get probably a higher rate because some people are going from a variable to a 1-year fix to kind of write it out and time it like that. Personally, what I would suggest to any of our clients is, especially the ones that are coming up for renewal, maybe do a 3-year term, because the difference on a 3-year term versus the 4 and 5 are generally pretty much the same. You might pay a little bit more for the 3-year, but on what I'm thinking, if you're renewing, let's say September now, by next September, you're hoping that the rates will stay the same. Yeah. And then those 2 years that are left on the term hopefully will come down.
Yeah.
Again, it's literally like throwing a dart in the air and you're hoping for the best that's not going to land on you. That's just what I think would probably be the best bet for a renewal. Somebody going into this market now, depending how big of a mortgage is, if you're a little bit of a risk taker, maybe you go the variable because you're like, okay, my mortgage is small enough that I can account for maybe it going up an extra percent, because then, maybe in the 2 years it goes down 1% or 2%.
Yeah, like if you're buying a house now where you could afford the variable rate at like 7.2, 7.3, if you could afford that now, a variable, might as well just do the variable, I guess. At least you could break it or refinance it earlier. It's a tough choice.
It really is tough, because at least on a fixed, even with the interest rates going down, so say you take the fixed versus the variable, at least your monthly payment for the next said years is the same. Yeah. Okay, yeah. If you're at 6% locked in for 3 years and within a year it goes down to 5%,
you feel silly.
You'll feel silly, but then what happens if it doesn't? It goes up. Then you're like, well, at least like that you can kind of budget for what your mortgage is. So I mean, it really is tough. There is no one shoe fits all. It's risk management. It's what you feel comfortable with.
The luckiest people, and we know they're lucky because nobody knows.
No,
but they'll tell you they're smart.
Of course.
The ones that locked in last year for 5 years at 2.4,
they're laughing.
Everything fell into place. Absolutely. They were up for renewal, or they just bought a house.
Absolutely.
It was a perfect storm, and they ended up locking in 5 years at 2.4. God bless them. Very lucky. If they tell you it was planned, they're lying.
Absolutely.
It's a shot in the dark because nobody knew it was going up this crazy. No. And when they locked in at 2.4, variable was 1.2, 1.1. Exactly. People were getting 1 even.
And people were laughing, going, "Oh, you're paying double," but nobody has a crystal ball. And that's just it. So I mean, we do think one thing for sure is in the next 2 years or so, rates will come down. Are we saying that rates are going to be what they were COVID?
Oh, no. God.
I think that rates will the lowest they'll go is maybe 3.54, and that'll be the norm. And when rates are at, the 3 to 4 kind of range, that's a good economy. Everybody's getting paid, because the problem is with those mortgage rates being so low that they were, they were too cheap. Not enough people
Yeah.
were getting the money that they deserved or they needed, or bills weren't getting paid. And this is what happens. It starts this trickle effect where,
Yeah.
and
they
this money's
overpaid
going to
too.
be very, very cheap for a very, very long time.
So what was that?
Really?
What was
Very
that?
long time means a year, 2 years?
Sorry, did you?
I didn't say nothing.
Good.
No political banter on this channel.
Good.
But guys, honestly, if you're feeling kind of the pinch of what's going on, please feel free to reach out. We have a big variety of different brokers we deal with. Personally, what I've seen to be the best is Joe Blow goes to a bank and says, "This is what I need," and then does the homework themselves, or essentially they're being their own broker, because at least like this, if you're comfortable with that and you're comfortable with kind of the dealing and just kind of going back and forth and putting in the legwork to go to RBC, TD, and Scotia, and then kind of using them against each other to say, okay, well, they're going to be me, they're going to be me, they're going to be me. There's no harm or foul in that. Sometimes
you got to put the work in. People want everything just like first guy. Let's do it.
Not, like every industry, there's a bunch of bad realtors, there's a bunch of good realtors. There's a bunch of bad brokers, there's a bunch of good brokers. So sometimes brokers are incentivized, just like realtors, to not do the right thing. So just take everything with a grain of salt. And if something's not sitting right, don't ever hesitate to ask questions or to ask somebody who's already doing what you want to do, because they've done it. They can guide you in the right direction. You don't know everything. And when people pretend like they do know everything, those are usually...
Stay away from those guys.
Exactly. So hoping that, this kind of shedded a little bit of light on that viewer's question on, the mortgage type, the variable versus the fixed. Like we said, these are just our opinions. But if you do need... please feel free, reach out, send us an email. We'll refer you to our great contacts that we have, and we're always here to help.
Yeah, I mean, and to butt on that, another question just about the liquidity of buying a house. I know we had a question about that. Look, buying a house and putting down the down payment that you need nowadays to have a reasonable mortgage payment, you're looking at putting in most of your savings.
Yeah.
So just remember that when you put in most of your savings, most of your money, most of your liquid assets, you don't want to end up being house poor. You're probably going to end up being a little bit house poor. So keep that in mind. Like, you're not making those big expenses. You might not be eating out as much, especially during this time. You might not be spending extra on a vehicle or a trip or whatever it is, right?
It's a very fine line, like you mentioned, of the being the house poor. And I mean, these are most people's biggest single assets. And I mean, it is great being a homeowner and that sense of pride. And it's nice knowing that you're paying into kind of your something. You can get equity, because one thing we know for sure, the markets always go up and down. The market bubbles, the peaks and valleys, the hills,
long term.
But time and time again, you'll always make something, as opposed to a landlord. And some people, it works better to rent depending their situation. And there's nothing wrong with renting.
It's a down payment that people have problems with.
Exactly. And that's why we always recommend to our clients who are like, well, we don't have 20% down. Okay, so put 5% down. Does the 5% down, is it going to be more beneficial for you to pay that insured mortgage to the CMHC, and at least you have home ownership, as opposed to just paying for rent that someone else is really your boss and you can't really change the house, and
you're not building credit,
you're not building credit, and you're not building equity, the two biggest things.
It's tough.
It really is tough.
And obviously, the more money you put down, the cheaper your monthly mortgage is. So
of course,
do the math, take that into consideration.
Whatever works better for you. Yeah.
Whatever works better for you. What do you need to live off of?
Absolutely.
There's a lot of homework to do. Like when we fill out our mortgage stuff, there's a lot of questions, and you got to be honest. Like, how much do you really pay a month for your phone, your TV, your food, your gas?
It's almost like kind of feels violating how much they scrutinize your finances, everything. 3 months worth of your bank statements, and what's your T4, your assessment, what kind of debts, how much you make. That's a lot
of Wendy's. How often you guys go to Wendy's? What do you mean? That's a couple.
So I think we'll wrap up with those two questions. Keep them coming in.
Yeah,
we definitely have a couple more episodes coming out of we've got
just questions. We got tons. There's honestly, guys.
There's so track.
There's so many questions in here.
I can't even keep track how many. So
We got a lot of shows coming up.
a lot more videos coming out with the Q&A. And if this isn't kind of your guys' style and you kind of want maybe a half and half Q&A and a half of what we do, tell us. We're all open for it. Comment, questions, concerns.
Yeah, we're here for you guys. Whatever you guys
Absolutely.
need. Keep them coming. Keep asking.
Yes.
Don't forget to like, share, subscribe.
Absolutely.
Follow along for more details.
Tell your friends and family.
Yeah.
They want to have a laugh.
Have it on in the background. Usually when I go home, I put this on in the background.
That's just because you're trying to get views, isn't it?
No, I don't think it even works anymore.
No, I don't think so either.
This is the old school.
This is just for, bringing some value to our longtime viewers and, new viewers that hopefully will become our longtime viewers.
Yeah.
All right, guys. Until the next one, we'll see you soon.
We'll see you out. Logging off.